Good morning, fellow traders, and welcome to this market analysis presented by pipsmatter.com. We're going to go over everything you need to know before you start trading today. There's been a lot of things happening in the market since yesterday, and if you've been following our analysis or the live trading chamber yesterday, well, you would have either realized we were extremely correct on oil, or you would have made some serious dough. So, OPEC has reached a deal yesterday, and that deal is to cap the oil output for the first time in 8 years. Now, the Organization of Petroleum Exporting Countries has reached a deal to limit oil production. This deal will come into force this November. The result of that deal was that U.S. energy stocks jumped significantly, with the energy sector gaining 3.9%. Now, the most among the S&P 500 11 sector, the benchmark index is up 8 points, which is 0.39%. It's going to be even more today, probably. The Dow is up 89 points. The Nasdaq is up 6 points as of 6 p.m. GMT, which was yesterday. We've seen it rise even more, and we believe that prices will continue to head even higher. And if you watched our market analysis yesterday, we've called buy on DAX, we've called it a buy on S&P 500, we've called a buy on oil, we've called a sell on USD CAD, we've called a possible breakout on AUD USD. I'm not going to speak about what happened yesterday much. We saw gold fall very little, 0.4%. We do see it heading much higher today. We see a green day for silver, a green day for gold, either today or tomorrow. The euro exchange, basically ruble, gained significantly also. The Norwegian crown gained. So every oil-related currency was, well, pretty happy yesterday. Here's something very important to note as well. The banks of Europe are having a pretty tough time. And Europe's biggest lender, which is Deutsche Bank, has lost more than half of its value since January. This is posing a very serious threat to the stability of other banks across the European continent. There are some analysts who are very worried that this could invoke a larger scale crisis, much bigger than the one we had in 2008. And if you look at DAX shares and the price of its stocks, it's just been tumbling down. So Deutsche Bank is having serious problems, and its problems have raised questions about the health of other big European lenders. Now, the share price for the Royal Bank of Scotland also dropped 13%, and Italy's Unicredit is down 12%, and this is just this month, 13 and 12% down. Now, the Bloomberg Europe 500 Banks and Financial Services Index is also down for 4.2% for September. This is the worst result since June. And remember, June was Brexit referendum. That was some big serious stuff happening there. And there is no serious stuff happening right now, and we're going down. Now, the problems of Deutsche Bank are putting the German government in a pretty serious dilemma, and it must decide whether to save the bank, well, whose assets are actually valued at 1.8 trillion. This is half the size of the German economy. According to other analysts as well, Deutsche Bank is actually much more important than Lehman Brothers were. If you guys remember, Lehman Brothers, bankruptcy happened during the last financial crisis, and it was not rescued by the US authorities. And this pretty much kicked off the 2008 global crisis. So that's something very important to look for. We see European banks, prices of their stocks heading much lower throughout next month. Now, the World Trade Organization, this is also very important to note. The World Trade Organization has cut its forecast for global trade growth this year by more than a third. And this is pretty much the first time in 15 years that they're saying that the international commerce will slip below GDP. According to the WTO, global trade will expand by nearly 1.7% this year, which is well below the forecast they had in April, which was 2.8%. That's down 1.1%. Now, the forecast for 2017 has also been downgraded. Trade is now expected to grow between 1.8 and 3.1. This is down from 3.6 Now, the downturn in trade reflects the slowdown in countries such as China, Brazil, which, by the way, we're going to be releasing a report for China. We see bigger problems happening in China. Just as the market drops down and then corrects, that's what we saw in China. A big drop, then a decent correction, and now we're expecting a second drop, which will cause gold prices and silver prices to skyrocket up towards the 2000 level for gold. Now, like I said, this reflects a slowdown in countries such as China and Brazil, as well as for lower levels of imports in the USA. The WTO's biggest downward revision on imports from its April forecast came in South America. Their forecast is from negative 4.5% to negative 8.3% for South America. The US from positive 4.1 to 1.9, and Asia from 3.2 to 1.6. The only positive prediction we had is that it predicted that the European imports would rise to 3.7 instead of 3.2. Okay, so today's news. Today's news, we have the German and Spanish inflation releases. They're actually expected to rise above. We also have a couple of ECB speeches, but we did not expect anything new from them. So we do not expect any volatility coming out of there. In the US, we have a couple of Fed speeches, including one from Yellen. Now, most speakers are fairly neutral, so we do not expect much new information, but again, you never know what can happen. Today's trades, AUDJPY. On its 4-hour time frame and on its daily chart, there is a very nice systematical triangle. Higher highs, made higher lows and lower highs since mid-June. Now, we're bullish on this pair. This is mostly based on the diverging monetary policy basis between the Royal Bank of Australia and the Bank of Japan. If you recall, last week, the RBA minutes pointed that the Australian bank is no longer looking to cut rates anytime soon. And the Bank of Japan monetary policy, excuse me, the decision was to keep the doors open and add more aggressive stimulus. So, we are in a systematical triangle. We believe a breakout is about to take place. What we are going to be doing is taking a very small 0.6% risk on this trade. So 0.6% risk. That gives us a stop wide enough for about 103 pips. So the stop loss here is 103 pips, and the trade was just taken out. GBP JPY, the pair has just bounced off a triple bottom. We see the pair heading much higher towards the 134, 135, or even 136 level. So AUDJPY, we believe a breakout will happen today, tomorrow, or early next week. So we see a little bit of weakness coming from the JPY, but that's only with the AUD. We see strength across the board next week or 2 weeks. Now, it's important to note that volatility on AUDJPY is at a mere 0.75 points. That means that the last time it was at this level, we saw a move that moved the market over 1,000 pips in 34 trading days. Okay, so the last time price was there, we had massive movement. So we expect further movement, very strong movement of AUDJPY, but also on GBP-JPY. We see GBP-JPY heading higher before moving lower, and the downtrend continues. Okay, so yesterday in our trading video, we said that we're long silver, we're long oil. Oil has since then risen by over 250 pips since we said that. And there is a strong breakout. So we see price of oil heading further up. We believe that the 52 level is the next major stop. We see silver heading higher, but we also see gold joining the club. We believe that silver trough next week will head all the way up to about 75 towards 100 pips. And that will take about 3 days to complete, if not less. We see gold heading higher as well. For the commodities, we believe gold will head significantly higher by about 1,400 points, and the next major stop will be 1370. Going on to indices, we said to buy yesterday S&P 500 and DAX, the DAX 30. We've been buying DAX for the last 3 days, and everything's been going really well. And we see S&P 500 very soon breaking into new highs. And we believe that the 2250 level is our next major target. So that's where we're going. That is roughly around 72 points, but we see the price of S&P 500 heading significantly higher, but we do see it crashing later on in 2017. So tomorrow at 5 p.m. plus free GMT, we will be holding a live session on candlestick analysis. Now, candlestick analysis has increased our win ratio by a good 13 or 14%. We use candlestick analysis to determine when to buy on resistance, on support, and sell on resistances, or using our mathematical points of interest. So this actually helps us a lot. You can register on our website. Simply go on www.pipsmatter.com, head over to the workshop section online, and just register for the event. There's something magical happening at Pips Matter. The Pips Matter Premium Club will officially be released from Monday. This special club, and I'm just going to name 2 benefits of this, and these 2 are enough to make you some serious money in these markets and teach you some serious lessons. So the Pips Matter Premium Club is an exclusive area for traders and investors. In this Premium Club, our best traders, including myself, will be providing direct information to people. Not general, but specific and directed to the individual. So what happens is you're going to receive a comprehensive risk management analysis for your account. By us providing you a full risk management for your specific account, there is no way in hell you're going to lose your money if you follow this system. You're going to receive short, medium, and long-term analysis on all of your favorite trading pairs, and you're going to receive that ongoing. You're going to be in the loop for all high-impact market movements, such as breakouts. Yesterday's oil information was sent out to all of our premium clients. Even though that the premium club doesn't exist, we've sent out to many of the people who are already subscribed to our services. We've sent out information that oil would break out. We also said AUD would break out. So these people, there's a couple of people who sent me emails over the night telling me big thanks for what happened, because they did indeed make some serious returns. So more on this will be coming out on our website. The service will show up on our website sometime today, and from Monday you're going to be able to subscribe to it directly. We will be giving a 1-week trial to the premium service, so 5 trading days, full trading week. Thank you all for watching this. I wish you a good trading day today, and stay safe, and I wish you all the best. Goodbye now.